This right over here is the price of Bitcoin from 2019 and 2020. And yes, we only have a couple of trend lines here, but I want to explain how there is very similar price action on Bitcoin during the last few months with these trend lines and how we can expect a sign of strength or a sign of weakness. We're going to go through the lower time frames to explain those major levels that I am taking into consideration for my next trading setup. Now, we're also going to take a look at this chart, the volatility index. Very crucial to understand what has happened during the last decade with these large volatile moves to the downside. We'll be taking a look at some very interesting data and news to the end of this video, so make sure to stay tuned till the very end. Now, if you're not trading on any platform, I would suggest doing it on Bluffing, guys. It is a no KYC platform, just with an email and a password. You can sign in and start trading, and you get 15% cash back from your initial deposit. We are also having a competition right now, and we're doing pretty good on the ranking here, as you can see, to see if we can get a piece of the cake of this $300,000 prize pool. You just need to scroll down and sign up to Bluffing here with the links down below in the description. Now let's dive in right away, guys. This is the price of Bitcoin on 2020, right? We can see how we formed those lower lows during 2019 and 2020. Of course, this is on the daily chart, and this move to the downside was much more aggressive than the move that we've had on Monday, okay, during the last week also. However, we've been respecting this lower low support trend line. We also forming here an ascending wedge back in 2020 that looks like it's going to roll down, but it finally ends up breaking to the upside, not claiming the lows. Now, we do have this lower high resistance trend line forming this kind of bump and run pattern where we have the bump phase. We start climbing up to the lower high resistance, and as soon as you break out that resistance, it's a confirmation that the trend is shifting here to the upside. Now let's zoom in here into the price action that has happened during the last several months, right? Where we do have that consolidation period, and we are forming lower highs and lower lows, and the lower low support trend line has been maintaining very nicely as support on Monday's drop, as you can see. So we wick beneath the level, maintaining and getting this bounce. We do have the lower highs from the last week, right? Since we created the high from last Monday. Very aggressive move and a very aggressive bump phase. Now we are just slowly climbing up on the lower time frames in this ascending wedgie structure, which you might believe has a very high chance in breaking down, okay? Of course, there could be a fake out, there could be a successful breakdown and get some support. I'm going to explain those levels in detail, guys, but something to take into consideration that if we do get a massive solid breakout here from this lower high resistance trend line and just start going to $61,000, $62,000, this could be a successful breakout. And I know we do have a CME futures gap right there topping here at $62,000 range. And most of the people might think, okay, aren't we just going to fill the gap and then start breaking here to the downside? Well, we need to pay attention on this lower high resistance trend line because it's very likely going to find some support if we do get the break up, okay, and then start correcting here very aggressively. There are some certain levels that I want to talk about, of course, and some Fibonacci levels, confluence levels for those potential trading opportunities. Now, this ascending wedge to try and detect the top has been very complex. I haven't been taking any short positions because the main reason why is we are forming consistent bullish CVD divergence, meaning that there is a lot of retail short positions entering at these levels during the last 24 hours. People want to short because they do see the price of Bitcoin forming this ascending wedge and very, very poor price action. However, you might have been well off here scalping longs on these retracements. And the main reason why is because you're forming bullish CVD divergence. You're getting retail, okay, shorting the market. You're forming those lower lows on the CVD, higher lows on the price action, taking the highs. You're forming higher lows on the price action, lower lows on the CVD, taking the highs. So you are consistently here forming those bullish CVD divergence and just taking the highs and taking the highs. So without a doubt, as you're forming bullish CVD divergence, you do not want to look for short positions. And if you are at this level, you just want to have your stop loss at break even, realizing that you're having bullish CVD divergence. So you might as well get into the retracement, get into an easy resistance support flip, and just look for the target at the highs. Now, currently, we are not forming bullish CVD divergence. We are just about to form bearish CVD divergence here in the blue. We're getting the blue here, which is the rest of exchanges that could be forming a higher high. So this is the first time in the last 24 hours that we are not forming lower lows on the CVD. We are actually forming very steep higher lows. We're getting a lot of retail, speculating on the breakout of the highs here, expecting higher levels. And you can see that massive spike on the CVD, right? During the last few hours, big run here to the upside. And now is when we are not forming bearish CVD divergence, right? We're just forming higher lows on the price action and very aggressive higher highs on the CVD, which means it's unlikely that those bullish CVD divergence are going to be building up. So now is the moment where the price could start correcting quite aggressively, when you've stopped out all of those people that have been shorting during the last 24 hours here at these levels and stopping them out. And now you get a lot of aggressive traders getting into the breakout, and now is when we're getting the possible correction. Okay, so CVD is very good, so you can actually look at the current price action on the very low time frames. Now let's talk about the most important levels here that I do see here on the chart where I would consider a possible trading setup. So let's just zoom in here on the 15-minute time frame. And yes, we do have that CME futures gap, guys. I do remember the low of the gap is almost being hit, which is around about the $58,000 range. And this area is very, very interesting for me. And the main reason why is just looking at Fibonacci retracement. When we take a look at Fibonacci from the pivot high of the drop from last Monday at 70K to the lows, we got 50% Fibonacci, where we do have, okay, part of the gap being, filled, right? You got the low of the gap, which is usually a lot of resistance as well, and the top, which is also resistance. Now, taking into consideration the 50% Fibonacci at 59,500, you do have a really good lower high right there, which is exactly at the 50% Fibonacci, which is a very good respected fib level, where we do have that lower high potentially for a liquidity grab. And you also have the lower high resistance trend line, okay? Now, could we break that trend line? Could we surpass the 50% Fibonacci? I don't know if that is going to happen or not. What I do know that if we do come up there very fast and we reject from this pivot, we are going to be getting that resistance from the lower high resistance trend line. And there could be a fake out to the upside, and then the market is going to start correcting quite aggressively. So the interesting level here for me on higher time frames, right? I'm just waiting patiently. This is very wedgy. The price could break down at any minute. It could just continue wicking the highs. I have this level. This is a high confluence level, 50% lower high. I'm looking for a failed breakout. If we break out successfully, then I would be looking at the 618 Fibonacci at $62,000, because this also is major resistance. It is the top of the gap. It is also the lower high that we have here, and the 61865 Fibonacci, the golden pocket ratio, right? We have 62,000 to 62,500. And when we zoom out on the 4 hourly time frame, that is when we do have the value area low from the entire trading range, okay? The value area low is slightly below from filling the gap, but this is the zone where if you fail to get above the value area low, right, where the price can get very choppy, without a doubt, I would be interested into some short positions here if the price action gets choppy, okay? Because it's the value area low, it's the top of the gap. It is also some lower highs here that we do have on the lower time frame. Beautiful for a swing failure pattern and a liquidity grab, exactly where we have the 618 and filling the gap, guys. This is a zone without a doubt that I would be attempting some shorts, and potentially we do have some choppiness We need to be very defensive. I will be looking for double, triple tops on the 3-minute, 5-minute time frame if we start getting that reaction, because without a doubt, this could be the swing short position where we're getting a massive rejection and a big pullback in the next coming days. Okay, so yeah, I am thinking bearish as well, guys. The levels are the levels on the chart that have high confluence, and the first one is 59,500. That is a first attempt right there for a nice little pullback or a fake out, and we're starting to get a major pullback, right? We'll be taking profits on the way down without a doubt. I'll be targeting VWAP, any local levels of support such as point of control from today, right? We need to be trading, okay, intraday and scalping, right? There's, a lot of people will possibly short here a major rise. You are going to get the drop, but people will be holding that position and even having a stop loss, still at a loss and not taking profits, expecting that this low is going to be hit. We need to take profits as traders as we go down and hit local support levels. If we break out here, without a doubt, I'm looking at the $62,000 range. This is crucial. It's the fill of the gap, the 618 and the value area low range from March and July, okay? March and August. What if the price does not move up? We are breaking down. This has actually been a bearish pattern. We've broken down from this level. I'm not really much of a breakout trader because I'm very much aware of the fake outs, right? I know we could fake out down here. We could fake out up and absolutely reverse. I'm really not a breakout trader, not too interested. I'm more interested in the possibility of the price breaking down from here and analyzing the local levels of support. Now, when we do zoom in here on the chart and we are breaking down, this is very much a possibility that this could be a wave one. The main reason why, because we have massive momentum to the upside and there's too many waves for this to be an ABC kind of structure. I do see this as a possible 1, 2, 3, 4, 5 in a contracting diagonal, and a movement down here is going to be very tricky. If it gets very impulsive, well, obviously I'm not interested. If we move down, we get a bounce and have another leg here to the downside in a 3-wave structure, I will be analyzing very carefully to see if we can form a higher low for a speculative wave 1, wave 2 and a wave 3. If we break down very aggressively, of course, with a falling knife, not interested in taking a long position. Only one level, which is that naked point of control from the price action that we had here on Monday. When we get the session volume profile, we left a very high volume node and we got a higher low right over there, which is very interesting. Of course, point of control is here on higher time frames, but the high volume node is right over here. You can see there's a very large spike based on the price action that we do have here. This is exactly where we have this higher low, as you can see, which is sitting at $52,600. When we put in Fibonacci from the pivot low to the pivot high currently, this would be hitting the 618 Fibonacci, okay, at $52,300, just sweeping the low, and I'm looking for a possible swing failure pattern to get a really nice bounce of potentially $1,000 or $2,000. I will be targeting this low right over here, the VWAP as well, okay? So it's a scalp day trade. It's in, take some profits because I'm very much aware of the price continuing to the downside, but it's a great level to get a reaction. Now, that is basically it regarding levels, guys. We got this one, we do have this one right over here, and we have this one at $62,000, which is the 618 from the overall drop. Inside here is very complex. We could be breaking down. We've been forming bullish CVD divergence. We are not forming bullish CVD divergence at the moment. So we have a high chance that this could actually be the breakdown in the next coming hours. Now that breakdown is going to be the moment that we need to analyze the price very carefully, right? Getting to the $63,000 range to see if we are going to start forming some massive bullish CVD divergence on higher time frames, which is basically creating those very aggressive lower lows on the CVD as we're moving down here from this ascending wedge. This is going to be crucial, guys. We are very likely, at least on Bybit, okay, going to be forming some lower lows on the CVD, and very likely we will on the rest of exchanges, okay? So that movement down is going to be crucial to analyze how we are moving down. Is it with power, with volume? Is it very choppy? The more choppy it is and the more three-wavy it is, the better, because that is the moment where we know that we are getting certain reactions and we could look for that wave 2 and a reversal to the upside in the next coming days. That is basically it on the Bitcoin technical analysis, guys. Major levels here to take into consideration. I'm sitting on my hands and waiting for those levels to be hit to get into the highest probability trading setup. Let's take into consideration this chart over here, the volatility index chart with the price of Bitcoin here on the top. Now, out of the last decade, right, over a decade, almost 15 years ago, we can see how the volatility index, right, has been having big spikes. This is when we get a big major correction in a day or in several days. In this case, we had one on Monday, right? Monday volatility index went through the roof, going to similar levels from the C19 crash. We also had one here in 2018, 2015, and here back in 2011. Now, out of these 5 moves, all right, on the volatility index, we've had one that actually continued the downtrend. This was in 2018. So downtrend did continue for several more months inside of that bear market. However, the other 4, of course, we've had a major rise. Of course, I'm counting this 4 right over here, but this could be the one, right? We've had from 4, we've had 1 that hasn't and 3 that has got a major bounce. The latest one being the C19 crash, where the volatility index went through the roof here. Now, the question is, of course, could this continue? Could we see a few more days, wick the lows, get some more fear in the market, or is this the low? And there's a lot of answers here for why this could be the low on the price of Bitcoin and the stock market. And that is because we do have some emergency meetings going on. Japan pauses rate hike in emergency meeting. We do know also the Federal Reserve possibly going to cut rates before September. And we do know that the money printer has been going on as well. Okay. We also have Japanese firm Metaplanet announces rise on 10 billion yen to purchase more Bitcoin. We do also have Morgan Stanley 15,000 advisors to start pitching Bitcoin ETFs from tomorrow. Very, very bullish midterm. Accumulation is continuing. Institutions have begun to inject funds into the crypto market and buy the dip. We can see this on the data. We can see the wallets. We can see the purchasers. So there is massive accumulation going on. You can see 404,000 Bitcoin has moved to a permanent holder address. Why do we know it's a permanent holder address? Well, basically because it's only being adding Bitcoin and not doing a transfer to an exchange to sell it. It only buys and hodls, which is extremely bullish. A huge amount of Bitcoin, as you can see. So accumulation is happening. And why would there be accumulation here at this range when we are going to enter a massive recession and the markets are going to collapse? Well, this says something, right? If the big players are still buying, potentially it does mean that we could be bottoming out very, very soon. Not much more has to be said in this update, guys. Thank you very much, and I'll see you in the next one.